Hey, everybody, welcome to the Thinking Crypto podcast. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. It supports the podcast and it doesn't cost you anything. Well, folks, we got to start by talking about the price of Bitcoin, which is doing something very interesting on the daily chart. We are seeing a bounce. We're seeing a reversal here. And let me give you some key metrics. So Bitcoin at the time of recording is near $67,000. But what's interesting is the RSI looks like it's in the oversold zone and it's starting a reversal. Now, this is just a thesis. It's a probability, and we need it to continue to play out so we have further confirmation. I would not bank on this. I would not put money on this until we see further confirmation that it keeps moving upwards. The other factor is the stock market. The NASDAQ, the Dow Jones Industrial Average as well is moving. It's bouncing as well. And what we're seeing is the DXY is in the overbought zone. So clear contrast, which is indicating we may have found the bottom of this pullback. Now, once again, I want to caveat that by saying I don't have a crystal ball, but based on the facts we have today, that's what it's showing. But the markets have often faked this out. So we have to be careful. That is why I'm cautiously optimistic. So if this plays out like we're thinking, this is very good. We're starting to see indications on the altcoin market charts and much more that over the next, I think, couple of weeks, this market will start to recover and start to rip upwards. The bull market's not over. We got another leg up, and I'm anticipating higher highs. I'm still bullish on the macro. Just in the micro, we are in a pullback, which is normal and healthy. So fingers crossed that this keeps playing out. Here, analyst Adrian Zadunchik highlighted Bitcoin breakout attempt at $67,000. So folks are recognizing that there's some sort of reversal happening here. But like I said, let's give it time to confirm this is indeed what is taking place. Now, let's jump into some news, folks. We got news here that the two SEC lawyers in the Debtbox situation that got sanctioned are going to resign. And these people should have been fired a long time ago, but they're being forced to resign. But I don't, in fact, blame them because we know the head of the snake, the one who creates the culture of government overreach and unlawful activities, is scumbag regulator Gary Gensler. So we have to amplify this news. We need to use social media to amplify this and call up our representatives and much more because Elizabeth Warren and Gary Gensler are not quitting. They continue to lie and do unlawful activities, folks. And this is a government agency, but this is what we're dealing with. It's corruption. It's crazy. And these people need to be held accountable. So Eleanor Terry of Fox Business gave some additional information here about these two lawyers who resigned, saying, according to their LinkedIn profiles, Welsh and Watkins both only had 1.5 years experience at the SEC before their resignations. Prior to their SEC appointments, Welsh was working at Cooley LLP and Watkins for Parsons, Bailey, and Latimer. Interesting side note, she says, while at Cooley, Welsh helped represent crypto company Kick in its lawsuit brought by the SEC in 2019 under Chairman Clayton. So what we've been seeing, though, is that many of these SEC officials are leaving and going to work for the crypto industry. So they're not true believers in what the SEC is doing. It's fascinating. And just recently I shared the news about, I think it was, I don't know if she was a lawyer, but she was involved in the lawsuits against Ripple and Coinbase. She left and now she's working at a law firm where she's supporting crypto companies. So clearly, even the SEC people who leave, they go work for the crypto industry. Jay Clayton, Bill Him, all these guys did it. It's fascinating. They know the technology is here to stay. They know the potential, but it's the puppet. They're on puppet strings being pulled by the TradFi incumbents, Gensler, Elizabeth Warren, because Jamie Dimon and all these banking guys want to control this market. They're getting disrupted, and the capital is leaving their TradFi investments going into crypto. People are staking and putting their money into all types of yield-bearing products in crypto and earning more than the bullshit interest you get from checking and savings accounts nowadays. So that's the game here. And these guys should have been fired for a long time ago, but I don't even blame them. I blame the head of the snake, and that is scumbag regulator Gary Gensler. But don't just take my word for it. The judge said this in his response to what the SEC did. And Meta lawman James Murphy highlighted this. He said two of the SEC lawyers involved in the Debtbox case have been pressured to resign. But the court found that the misconduct in the Debtbox was not isolated to a couple individuals, but rather there was, and I quote, pervasive misconduct demonstrating a pattern of organizational bad faith and broadly implicates the commission itself. Who sets the tone, the culture? Scumbag regulator Gary Gensler. This is why I call him a scumbag. We're dealing with someone here who does not respect the law. He will stab people and companies in the back. You come in good faith trying to work with the SEC, he will then take that information and go after you, right? It's pathetic and it needs to change. So James says, picking a couple of scapegoats to throw under the bus does not equate to real accountability when the problem is endemic to an organization. He says, below are 7 steps I recommend for true accountability for the SEC's egregious misconduct in the Debtbox case. As far as I know, not one of these steps have been taken. So I'm not going to go through everything. He shared this back in March, but folks, we got to keep fighting. We got to use social media to our advantage. Now, Jason Yanowitz, who's the founder of Blockworks, also shared some thoughts saying 2 SEC lawyers just resigned after a judge sanctioned them for a gross abuse of power in a crypto case. The SEC's lawsuit was marred by false statements and misrepresentations, as well as a lack of evidence. Gary Gensler hanging by a thread these days. I think he's right. So we got to keep building the case and keep amplifying the facts, because politics and all these things is a big layer of it is optics and narrative. So we have to make sure the lies and hypocrisy and FUD being shared by Gary and Elizabeth Warren are not presented as truth to the public. This is why on this podcast, we're going to amplify it. We're going to amplify it on social media, and I hope you do as well. Now, folks, quick word from our sponsor, and that is BitGo. BitGo is one of the top tier custodians in the market. They have many great products, and they are used by many trusted brands such as Pantera Capital, Bitstamp, Bitcoin IRA. Nike, in fact, uses BitGo's wallet services for its NFTs. So their services include hot wallets, custodial wallets, self-managed cold wallets, and NFT wallets, and they have top tier security, insurance, and much more. This is headed up by Mike Belshi, who is of course building in Web 1.0 and 2.0, and now he's here in Web 3.0. So be sure to check out BitGo. Link will be in the description. All right, folks, we got some very interesting news around Solana. OnlyOne has raised $5 million to build an OnlyFans clone on Solana. And the headline here says, but will creators join? So guys, we know the creator economy is huge and there's many different facets of it, right? There's obviously the adult content and there's creators doing different things. But, if they can create a version that has more benefits and bells and whistles than the traditional Web 2 model, if you want to call it that, they can get people to come on board. So OnlyOne has announced the closure of a strategic investment round of $1.3 million led by Newman Group, bringing its total funds raised to $4.8 million in order to build an adult content platform on Solana. So this is interesting. We'll have to wait and see. I can't judge it right now. They're raising capital. Let's see if they build a good product. The product has to, of course, be appealing, have great incentives, and it has to have less friction than the current OnlyFans setup. Because look, people are using OnlyFans right now. It's a very popular platform. So if they're able to do something with tokens and create, really good incentives, that would be amazing. And really transition many of these Web 2 apps and services to Web 3. Now, guys, we got some news about Stacks. Stacks is the layer 2 smart contract that is built on top of Bitcoin. And I know this project very well. I've interviewed the founder, I think it was a couple of years ago, but apparently they got an upgrade here. So Stacks Nakamoto upgrade unfolds a new era for the Bitcoin layer 2. The Nakamoto upgrade will enhance transaction throughput and enable Bitcoin finality for layer 2 transactions. The Nakamoto upgrade aims to enable faster block processing and ensure all settlements are finalized on the layer 1. This will allow Bitcoin to remain secure while being programmable, similar to Ethereum and Solana virtual machines. Munib Ali, co-founder of Stacks, told Blockworks that Nakamoto upgrade and the general growth of Bitcoin layer 2 infrastructure may revive interest in the Bitcoin blockchain itself. Now, I have conflicting thoughts on this, and I'll explain. On one hand, I believe in the free market. Who am I to tell people what to do, especially if it's an open source code and people can build on Bitcoin and so forth. But at the same time, I don't really think it makes sense to try to make Bitcoin like Ethereum or Solana. Bitcoin is digital gold and it's proof of work. And, these things that they're doing can oftentimes raise the fees for Bitcoin, and which is not great for global adoption and people in El Salvador and other countries. So that's my love-hate relationship. I'm not against Stacks. I love what they're trying to do. But at the same time, if the cons outweigh the pros, then it's not a good initiative, right? But maybe because we are in the early stages, they have to do future iterations to make this better. But I think we can all agree people don't want higher fees and they don't want slow transaction times. So they have to figure this out. Obviously, the Lightning Network is another layer 2 solution to improve that, but that hasn't gotten global adoption. It's only made penetration in certain markets. So we'll have to wait and see. And here's a great example of that. Bitcoin experiencing DeFi summer moment as miners rake in record $100 million post-halving. This is related to Runes, which is another layer created to help create Bitcoin ordinals or NFTs and so forth. So analysts at research brokerage firm Bernstein said Bitcoin is experiencing a DeFi summer moment as the new Runes token standard helps spark record daily miner rewards and transaction fees. But those fees are high as hell. I saw some people tweet about this. So not great for the day-to-day usage of Bitcoin, but the miners are raking in a lot of fees, and they're incentivized right now to bring in as much revenue as possible because they are businesses. They have overhead costs, and mining is going to be much more difficult now with the rewards cut, and the difficulty rate is going to increase. Not to mention, many of these miners have gone public, and your revenues can impact your stock price. So there's another layer here where these miners are just, hey, more fees for us, good. But is it great for the user experience? Not really. So this is where I have that love-hate relationship with what's happening, but we'll see. We'll see where things go. But I don't think this is great for Bitcoin. I think Bitcoin is doing well as digital gold and that store of value and the ETFs and much more. Doesn't necessarily need this stuff, but I can't, I'm not advocating for it to stop anybody or policing of it because I believe in the free market. Well, folks, I want to end it by reminding you all to check out my new book, Rethinking Crypto, The Crash of FTX and the Rise of Safer, Stronger Digital Assets, which is available on Amazon in both digital and paperback version. Support the podcast by grabbing a copy, guys. It's a great read. And I also have a book signing event coming up on April 30th in New York City. So if you are in the New York City area, come check it out. I'll put a link in the description for you to RSVP and learn more. It's going to be right across the street from the Wall Street Bull. So we're doing this in the financial district, guys. Come hang out, come grab a drink and much more. We'll have some food as well. So looking forward to seeing some of you there and get a signed copy of the book, guys. So I appreciate you all. Thank you for watching and listening, and I'll talk to you all later.